Hey there, welcome to this video where we're going to analyze and dive deep into Robert Kiyosaki's book Cash Flow Quadrant. Now, let's explain all the benefits of its four main sections. In the employee section, Kiyosaki discusses the mindset and financial habits of employees. He explains how most employees rely on a paycheck to cover their expenses and how their income is heavily taxed. He also highlights the limitations of being an employee and the risks associated with relying solely on a job for financial security. Kiyosaki explains how most people are brought up with the mentality of being an employee, which means they work for someone else and receive a fixed paycheck for their labor. While being an employee can provide stability and security, it also comes with limitations and risks. First of all, employees have limited control over their income. They are paid a fixed salary or hourly rate, and their income is subject to taxes and deductions. They also have limited opportunities for growth and advancement within the company. Moreover, employees are at the mercy of their employers. They can be fired or laid off at any time, which can cause financial stress and instability. They are also limited by the number of hours they can work and often have to trade their time for money. To illustrate this point, let's look at an example. Imagine you work as a cashier at a supermarket. You make $15 per hour, and you work 40 hours a week. That means your monthly income is $2,400 before taxes and deductions. Even if you work harder and provide better customer service, your income is still limited to your hourly rate. Now, let's say the supermarket introduces new technology that allows customers to check out their own purchases without needing a cashier. Suddenly, your job is at risk, and you may be laid off. This is an example of how employees are vulnerable to changes in the market and technology. In conclusion, while being an employee can provide stability and security, it also comes with limitations and risks. If you want to achieve financial freedom and independence, you need to break free from the employee mentality and explore other options such as self-employment, business ownership, and investing. The second quadrant is called self-employed. This section focuses on the mindset and financial habits of self-employed individuals. Kiyosaki explains how self-employed people often have more control over their income and work, but also take on more risk and have less time freedom. He also highlights the importance of building systems and delegating tasks to grow a successful self-employed business. Kiyosaki talks about individuals who work for themselves, whether as a freelancer, consultants, or small business owners. They have control over their income and work, but also take on more risk and have less time freedom than those in the business owner or investor quadrants. Self-employed individuals often have a specialized skill set and provide services directly to clients. They typically charge by the hour or by project and are responsible for managing their own workload and finances. Some examples of self-employed individuals are graphic designers, freelance writers, and independent consultants. The benefits of being self-employed include the ability to choose the work that you do and the flexibility to set your own schedule. However, there are also challenges that come with this quadrant. One of the main challenges is that self-employed individuals are often trading time for money. They have to work harder to earn more, and there's a limit to how much they can charge per hour or project. Another challenge is that self-employed individuals often have to wear many hats. They are responsible for marketing their services, managing their finances, and handling client relationships, in addition to the actual work that they do. To overcome these challenges, self-employed individuals need to build systems and delegate tasks to grow a successful business. For example, a freelance writer could create a system for finding clients and hire a virtual assistant to handle administrative tasks. In conclusion, the self-employed quadrant offers a lot of freedom and control over one's income and work, but it also requires hard work and risk-taking. By building systems and delegating tasks, self-employed individuals can overcome the challenges of this quadrant and grow a successful business. The third section is business owner. In this section, Kiyosaki discusses the mindset and financial habits of business owners. He explains how owning a business can provide passive income and long-term wealth, but also requires significant effort and investment. Kiyosaki emphasizes the importance of building a scalable business model and surrounding oneself with a competent team to succeed as a business owner. What exactly is a business owner? According to Kiyosaki, a business owner is someone who owns a business that can run without their direct involvement. This means that the business owner has built systems and processes that allow the business to function even when they're not there, providing them with passive income and time freedom. One of the key differences between a business owner and a self-employed individual is that a self-employed person is essentially trading their time for money. They might be able to make a good income, but if they stop working, the income stops as well. On the other hand, a business owner has built a system that generates income even if they're not actively involved. Let's look at some examples to illustrate this point. Say you own a small bakery. As a self-employed individual, you might spend all day baking and selling your goods, and you're the only person who can do it. However, as a business owner, you would have built a system where you hire employees to do the baking and selling, while you focus on managing the business and growing it. This allows you to step back and work on the business, rather than in it. Another example would be a real estate investor who owns multiple rental properties. As self-employed individuals, they might handle everything themselves, from finding tenants to collecting rent to handling maintenance requests. But as business owners, they would have built a system where they have property managers in place to handle these tasks, allowing them to generate passive income without being directly involved in the day-to-day operations. In order to become a successful business owner, Kiyosaki emphasizes the importance of building a scalable business model and surrounding oneself with a competent team. This means creating systems and processes that can be replicated as the business grows and hiring employees who can help run the business effectively. It also means being able to delegate tasks and trust your team to handle them, which can be challenging for some individuals. Overall, the business owner quadrant can provide financial freedom and the ability to generate passive income, but it requires a significant amount of effort and investment upfront. By building a successful business model and surrounding oneself with a competent team, however, it's possible to achieve long-term wealth and time freedom. The final section named Investor and focuses on the mindset and financial habits of investors. Kiyosaki explains how investors create wealth through passive income streams and strategic investments. He also highlights the importance of financial education and the ability to recognize opportunities in the market to achieve financial freedom. As you may remember, in this quadrant, individuals generate income through passive investments and strategic financial decisions. Let's explore this quadrant a bit more deeply. Investors are individuals who use their money to make more money. They do this by investing in different assets, such as stocks, real estate, and businesses, among others. Investors usually have a long-term strategy, and they are focused on creating wealth through the power of compounding. One of the most significant advantages of being an investor is that it allows you to generate passive income. Passive income is income that you receive without actively working for it. For example, if you invest in stocks that pay dividends, you can receive a regular income stream without doing anything. Another advantage of being an investor is that it allows you to benefit from the power of leverage. Leverage means using other people's money to increase your returns. For example, if you invest in real estate, you can use a mortgage to buy a property. By doing this, you can leverage your money and generate a higher return on investment. Now, let's take a look at some examples of investors. The first example is Warren Buffett, one of the most successful investors of all time. Buffett is known for his value investing strategy, where he looks for undervalued companies with strong fundamentals. By doing this, he has been able to generate massive returns over the years. Another example of an investor is Robert Kiyosaki, the author of the Cash Flow Quadrant book. Kiyosaki is known for his real estate investments, where he uses leverage to buy properties and generate passive income. He has also invested in other assets, such as stocks and businesses, to diversify his portfolio. In conclusion, being an investor can be a great way to generate passive income and create long-term wealth. However, it requires a solid understanding of financial markets and a long-term strategy. If you're interested in becoming an investor, make sure to do your research, and always seek the advice of a professional. That's it for this video. I hope you found this analysis helpful. Thanks for watching, and don't forget to like, comment, and subscribe for more content like this.